Hey everybody, it's Pete. Welcome to today's Best Stock Picks. We are going to be making a game plan for Thursday, April 2nd, 2020. First to start out, I hope everybody is safe. I hope everybody's doing what they're supposed to do so we can get this thing out of the way and hopefully get life back to normal sometime soon. If you enjoy these videos, it would do me a big favor if you can click down and subscribe when you're done. Today we're going to get into following up on something we've discussed in a previous video, which is using the monthly and weekly candlestick charts to come into the day and have a reference point for reading the charts. So we want to make sure that we make that jump from chart reader to tape reader. So on the charts, we're going to look for reference points so that we can understand when we do tape reading. We know that if price is moving closer to or further away from a reference point, and we've been mentioning the fact that you can use, to keep it as simple as possible, either multiple moving averages if you want, or you can simply look at the monthly candlestick, which actually ironically starts today. And then we're going to go through a bunch of charts so that we can tell exactly what you should be doing when to set up the highest probability trades. And one thing I want to bring up, it's very exciting to think about the possibility of trading in this market right now. And a lot of people are home. A lot of people are bored during the day, for like better way of putting it. They're working from home, probably have a lot more freedom looking at their trading account every day, and with good reason. If you're a long-term buy and hold investor, been smacked around quite a bit, and the possibility of it going down further. From an investment perspective, I want to make it clear, I'm talking about the difference between investing and trading. From an investment perspective, there is a possibility we're going to see some more downside here. But I want to talk about, for those of you that are actively trading in this market who might not be someone who normally actively trades. This is a very tough market to learn. When I say learn, it's going to be an extremely expensive lesson for you to use this kind of volatility where the moves are so much wider than they were prior to the sell-off, because the market's unforgiving in two different ways. First, it's unforgiving in the span and the expansion of the volatility, in the sense that you can have much faster moves in a much shorter period of time. So it's going to be forgiving in the sense that if you're wrong and you don't have discipline and a plan and a strategy and don't get out, you're going to get slapped silly. The second part is you need to make sure that if you get involved, you're only allocating money where you are 100% sure, I have order flow, I have a bias, I have a darn good reason for putting money in harm's way, and you can follow it. Because having a good plan and following, it's not the same thing. I've been there. We all have these breakdowns mentally sometimes. So my goal here is when we're setting up stocks to pick, we're trying to pick stocks that have the greatest argument, have room to go, and they justify taking the risk. So we're going to pop in there. We have roughly about 8 or 9 stocks we're going to take a look at today. But we're going to start out with the market like we do every day. And again, if that's not something you normally do, absolutely something you should do. Because again, part of that perfect trade, the A+ trade, and you work your way down, the A+ trade is when you have everything on the same page. You have the multiple indexes on the same page. And for argument's sake, we're going to say the NASDAQ, the SPY, the Dow, the Russell, just to leave it at that. Then you go down to which sectors are in sync with the big picture, which in this case is down, whether we want it to be that way or not. We got 2 months plus of selling right now. What sectors are doing the same thing, and then which individual stocks offer the greatest reward. If you are not comfortable short selling, you could buy puts. You could trade some of the inverse ETFs, which again, I don't really recommend doing that if you don't have super discipline and a really awesome strategy, because that move, most of them, they 2 or 3 times faster than they're normally doing. We're already spiking up there, right? So we're going to jump into the charts. We're going to do that top-down analysis, and then we're going to look at some trades. We actually do have a few trades that we can look at on the long side. We have a couple of trades that I called out yesterday, which I got some great feedback on. VFC and JPM, both of them followed through yesterday. So if you took advantage of those, great. We're actually looking for them to trade lower again for at least 2 more days. We'll see if we get it. So we're going to jump into the charts right now. And first thing we're going to do is we're going to reiterate what we've talked about, which is now that this is the first day of the month, we can now use the color of the monthly candlestick to use as our longer term barometer. Now, if you remember yesterday's video, we had 3 different moving averages. You could do the same exact thing on the daily charts. I'm trying to simplify it so it's easy for you to make decisions. So going into tomorrow, as long as the candlestick on the monthly chart for whatever stock you happen to be watching. Happen to be looking at the SPY here. So let's just say, for argument's sake, we pull up Home Depot for the same thing. Now, Home Depot actually showing a positive, which really doesn't make sense because today was the first day of the month and the stock was negative. So I'm not sure why that is. Maybe because it's trading positive after hours. I'd have to see that. But you get the picture. But even though that's a mistake, no idea why it's a mistake. It's actually good that we just got a difference between a red candlestick and a green one. So whichever stocks you happen to be going through, that's going to be your first barometer. But here's the key to what we're talking about. It's imperative that you don't even look at the other side of the market. Now, I just want to briefly bring this back in. And this comes out of a coaching session I had today with John. And John, thank you. Always awesome. You're always prepared. It's awesome talking to you. If you feel like the market's moving a little too fast, or you're confused, or the stocks that you're looking at are in the middle of nowhere, first of all, don't do anything. You don't have to trade. The market's going to keep opening up. There's always going to be opportunity. But here's the point that I want to get to. When we have that line in the sand and we say this month it's positive, this month it's negative, whichever it happens to be in the stock right now, you should only be looking for trades in that direction until you see a reason not to. Now, intraday, you might see, like yesterday in Apple, and we'll actually go to the chart and take a look at Apple. Yesterday, Apple was very strong coming out of the gate. We actually had a inside candlestick breakout on the daily chart. So we're just going to go over here. We had these two consolidation candles, and then we broke out to the upside, and everything looked absolutely fantastic, right? So let's go over to that right over here. Everything looked awesome. But as the stock started to pull back, if it's not making sense to you anymore, and now hopefully you can start training your eye to see it's well offered, right? Lower lows, lower highs, lower, all the way down to the opening price, that's where you'd expect it to stop. Hopefully now you're seeing that. If it doesn't make sense, don't get involved, okay? So that means that if you have a bias going into the day and you say, I only want to be long today, that's it. Don't get into the day trading wiggles and jiggles and it's going down for this hour and now it's going up for that 5 minutes, and 20 minutes later I went down to the 1 minute chart and I found a trend. That's going to drive you batty and it's going to drain your trading account. I know, because I did it back in the day. In 2000, we were trading a little bit differently. We were trading on those really super micro time frames. It's exhausting. And here's the key. It's not the easiest trade in the world without a bias, without saying, oh, well, going into the day, I want to be long or I want to be short. Long means I'm only looking for spots to buy. Short means I'm only looking for spots to sell. So if we go back to the market when we broke down today, you can see I have what I do every day, as you guys hopefully are doing now, and girls, setting a line in the sand to tell you if today's order flow is in sync with the longer term order flow. Same thing with the weekly candle, which we'll take a look at in a second. So you can see here all day, coming into the day, I wanted to be short the SPY based on yesterday's close and the fact that we gapped down. So I'm not going to fight the gap in the morning. There's really nothing to do until the afternoon. So all of this price action, you need to force yourself to be disciplined. So if we're looking at the same thing on weekly charts, if the month happens to be green, you should only be looking for this weekly candlestick to be green. Now, I can hear you saying to yourself, well, that's boring. No, you know what's boring? Making money. It's our job to make money. It's not our job for excitement. You want excitement, go to the casino. At least they'll give you a scotch. This is professional speculating. And if we do it right and we do it disciplined and we do it focused, we have a better chance than most to come out month after month on the positive side because we had an edge, we followed the edge, and we followed good risk management parameters. So hopefully I keep drilling this in every day, and I'm seeing some really great questions in the chat box too. So if you want to drop some questions in there, absolutely, as soon as I can, I'll always get back to them. So just getting into a couple of stocks now, we're actually looking at the weekly charts now. If you want to drop down a little bit lower time frame, and remember, lower time frame, shorter distance between how you have that opinion, there's less money committed. Still, you can go week to week, right? So right now on the weekly chart, this is the week of Home Depot right now. As long as that candle is red on the weekly candlestick, you should be looking for sell shorts because that means this week's buying pressure. And again, the point that I want to make here is it could be the opening price. It could be the opening price on Monday. It could be the opening price on April 1st. It doesn't matter which one it is. Well, it matters in the sense that the higher time frame always dominates, and the higher time frame has more money being pushed around, right? The candlestick that forms over 30 days versus a candlestick that formed over the last 2 hours. Here's the thing. Chart readers struggle and fail because they're only looking for patterns. Traders, those who read the tape, have a reference point before they get in the trade, and they say, what are the odds of it continuing in that direction? And that's what we're doing here. So if you're comfortable with the weekly candlestick, monthly, or the moving averages, are you moving closer to or further away? I think it's easier to use the candlesticks the way I'm showing you right now with the monthly and the weekly, because you just look at it and like it's red. It doesn't get any more complicated than that. However, you can start to add pieces to the puzzle where we start to say, is it well offered? Is there room to go? So if we continue with the Home Depot example here, right? This is actually well offered because you have lower high, but it's not a lower low. So technically, actually, right now it's an inside candlestick on the weekly chart, right? So let's just pick another one at random. Let's stay away from Apple. We're appling it to death. So this is kind of an interesting one here. We have well bid, right? So green. So coming into this week, you would have been looking just on this micro time frame, and that's an important one too. Micro time frame, 1 week worth of buying pressure versus 5 weeks of selling. If you're calling a reversal here and you're only trading off of this one candlestick, this 5 days worth of trading versus this 5, what does that mean for your trade? That means you lower your risk exposure because you're trading against the previous 5 weeks in the most recent price action. The way a day trader would do that is they would come in and say, yeah, the stock's strong, but all day today it's trading weak. So if you're only trading that micro time frame, you have to remember it's a lower probability follow through, which means you should lower your risk exposure. And it could be a validated trade based on how you look at the market. But for me, I'd rather only focus on what's obvious and what's happened over a while. Okay. So I want to keep drilling that home because I really think it's important that when you're looking at stocks the next day, I want you in the back of your mind to say, what am I doing? The stock hasn't moved. Or what am I doing? Why am I getting out? This trade is awesome. I'm going to hold it. You need to say to yourself, if this happens, then I'm doing this. All right. So a couple of stocks, as we said, I'm going to take a look at, and I'm going to pop some volume in here because we actually had a couple of unique trades today. First thing I look for, are there any stocks to buy today? And although this stock, Canadian Natural Resources, is clearly in selling order flow like everything else, and looks like we're bouncing off the bottom. First thing, again, reading the notes. 1, 2, 3, 4, 5, 6. 6 out of the last 7 days, positive close, right? But here's where it gets interesting. Look at the volume spike. Look at the volume increase, and especially yesterday and today, at least the last 3 days, double normal volume for 3 days while it's closing higher. Something to keep an eye on. Is this a great idea? No. And that's actually something that somebody brought up in the video this morning. If I'm talking about increased volume after a downtrend, we still need to see it bounce and hold. So right now it's just bouncing. If it bounces and holds, that means that there's still what we call support underneath that. There's new buying underneath that. That first push and ledge, that's the spot to get in. SU actually has the similar chart pattern here. We can actually see same exact thing. We got a nice push to the downside, and now we're getting double or triple the normal volume. So these would be situations where you might be looking at these as I want to see a bounce to the upside. I want to see it go sideways, and that's where your tracking journal comes in. So these are ones that should be in our tracking journal over the next couple of days. Looking at stocks we can actually trade tomorrow for Thursday, April 2nd. We're going to take a look at what I call strong stocks with a strong close. Let me get the volume off here so it's not a distraction. You can obviously see TDOC is actually strong, but here's the interesting thing. It's above every key moving average and holding the bid with a very strong close. It was positive by 2% from today's open to the close. So something to consider. Now, from a longer term trade perspective, would we initiate this as a swing trade? No. If you remember what we talked about yesterday in Micron, it's in a trade. This stock actually is in a trading range, but it's showing relative strength compared to the market yesterday. So these would be the first stocks you would look to buy if the market shows any signs of strength. This stock needs to get above 172 after yesterday's close, at today's close at 162.50. So could you trade it between 162.50 and 172? Absolutely, but you need to know that's your target until we clear that level. So something to consider here, right? So you got to measure the profit potential based on where you can execute the trade. Next, we have ZS, another one, positive 2 days in a row when the market got hit, right? Especially today. This is an interesting one here too. You see it's clearly having a hard time over 62. If this stock gets over 62, I will take a look at it depending on if it pushes above 62 and holds there. So again, setting up some longs in a tape that's weak is good business planning. Next, we have NET, NET. very similar price action too. And again, looking at the notes of this, look at the notes. And when I say notes, I'm not a musician, I'm tone deaf. What I'm saying is, if you read the notes versus the song, look at how many days in a row buyers controlled the close, meaning it closed green. This is a stock that has buying pressure while the market's getting hammered and is actually making new highs. Now, it's not holding the new levels, very similar to what we looked at before. This one needs to stay above 24, preferably the 24.50 level, but that's another one to jot down, NET. And believe it or not, Peloton, if you're on Facebook, everybody's talking about, I need a Peloton because I'm bored out of my mind, right? Again, this is one of those trades where it meets all the criteria of a long, including being strong. But to me, the stock really hasn't done anything. This is kind of the right price. Every time it gets above 29, it seems to pull back in. I like the stock maybe over a little bit longer time frame, but I brought this one up and put it in there because it meets the criteria, but it's not a good trade. I need you to write that down. It might meet the criteria, but that doesn't mean it's a good trade. Does it justify the risk? Is there room to go? And how qualified is the order flow? In this case, the only positive thing about the stock is the fact that it was positive today in a down market. I want to look at a couple of other ones. Actually, one that we called out yesterday that is still in play is Chewy. Now, this is kind of the opposite of what we were talking about before, where we're looking for stocks that were strong in a weak market. This time, we're actually looking for stocks that are strong in general. And again, in general is relative, right? We're only talking about the last 2 weeks, but that's pretty strong compared to the rest of the market, right? This is one of my favorite trading setups where a strong stock pulls back for a couple of days, closes on the low the couple of days. I'm looking for this stock to open lower for a bid into this $34 resistance level. So you can see 34 is pretty significant. We punched through there. So this weak close in Chewy is actually good to set up a trade where we open lower tomorrow, a limit order down into this 34 area, probably like 34.25-ish, looking for that level to hold and have a new move to the upside. So this is actually one of my favorite trades looking into tomorrow. So the profit potential, right? That's the big thing everybody wants to know. What's the profit potential? Well, we said to look at the last move, right? The last move basically went from 30 to, let's say, 39, ballpark, not exact, right? So if we pull back here, that $9, we would add 9 to 34, which would bring us up to 43. So that's how you measure your risk. You're not really going to have that much risk if you can get close to that 34. If we do turn around and rally, that 43 would be the level that we'd be looking for. And the last one actually is ZM. Kind of similar, right? We actually had a nice little rally, and actually it's trending slowly. Obviously, Zoom. Everybody's on Zoom. I'm on Zoom right now, right? We got 3 days of selling, so a little bit of profit taking, right? Looking for a move lower to rally. Now, what's interesting here is we don't have as obvious of a spot to be bidding. So the question comes in: how do I know where to look to bid for Zoom tomorrow? If I think if it opens lower, where do I look? Well, here's the interesting thing. Zoom right now has an average true range of $13.40. So that means from low to high on average over the last 14 days is $13.40. That's what it normally does from a candlestick from high to low. So we're going to take that $13.40, and let's just use 13 so the math is simple, and subtract that from today's close. So 137 minus 13, which is what it normally does, right? So 137 minus 113 is 124. So the 124 area prior to that is where we should see the stock bottom out after 3 days of selling. So that would be 4th day of selling, looking to place a limit order in that spot and for that to be the bottom where it turns around. Now you want a short-term reverse, and our best case scenario for a swing trade here is we actually go down maybe a little bit higher than that level. Don't touch it all the way. We get a reversal candle, maybe a bottoming candle, a bullish U-turn when we close above the open, and that's where you'd look to initiate your new long. So hopefully today's best stock picks will give you some ideas to look into tomorrow. I am expecting the market to follow through on the short side tomorrow, to go down. If it does, and my stocks that are in my list from negative on the month, negative on the week, and below the opening price, those will be the stocks that I short sell. A big key from today was a lot of stocks opened lower and rallied. You don't chase the rally, right? That means that today's order flow is not in sync with what you want to see. So have the guts to make a call in the day. Say, I want to be long or I want to be short. I want to buy these stocks, and that's all I'm looking for is a reason intraday or as a swing trade for it to close and look for a spot. Or I want to be a seller if you're a short seller. A lot of people don't. Fine with that. If you do, only look for spots to look for a short. So whether you're doing that off the daily candlesticks, weekly, monthly, intraday, it doesn't make a difference. Pick a side, pick a spot, and be disciplined. Most importantly, be safe, everybody. Any questions, leave them in the comments. If you like the video, please do me a favor and click subscribe. Have an awesome night, everybody.